Hi everyone, welcome to this week's edition of Midweek Market Update. I'm Ashley Rosser with Victory Fiduciary, and it's been a week since we last met. I'm happy to say that my COVID test that was pending this time last week did come back negative, so thank you to those of you who did reach out to check on me. I'm doing great, my family's well, so sounds like it was a false alarm for an end of the summer cold, so doing well. And it's been a really interesting time in the market really since we last met, and so really kind of like where we are, seems like the bull is kind of on a tightrope right now. Which way are we going? And so you may remember that on Wednesday I kind of was really adamant about the fact that we were so far diverged from our moving averages, particularly in the NASDAQ. So the NASDAQ was trading 2 standard deviations above its 50 moving day average, and I was really concerned about that. And I really felt like it was unsustainable. When we get to those levels of being overbought, overextended, it really doesn't take much for something to happen in the market to kind of to trigger a sell-off. And so that was Wednesday that we had that conversation. And so Wednesday, before I did my video, I saw a news, kind of came across social media, S&P 500 rallies to close out best day in almost 2 months. This was Wednesday. Thursday, stocks fall the most since June. Dow down 865 points, NASDAQ off 5%. Just a really good example of the fact that things can change very quickly in the market. And depending upon what your sources of information are, you may be getting different slants on your information. And it's just a really good reminder of the fact that it's why the technicals are so important, because the numbers and the math, they don't lie. They are what they are. Now we have to interpret those numbers, but the technicals, they really can give you good value if you know what you're looking at. And so when we saw those technicals, I was very concerned. This is the NASDAQ here. And so just as a reminder, moving averages, this would be the orange line here, our 50 moving day average. The red line is going to be the 200 moving day average. Averages are just that. They're the average price action of an index. And so in order for an average to work, you actually have to trend along that line over the long run. And so we can become disconnected from those averages from time to time, but understand that always inevitably we will get pulled back down to them. And so the issue is that the further extended we get from these averages, typically the harder that snap down may be when that finally happens. And so if you can see back last Wednesday at the tippy top, I can't even reach there, but you can see where we were. We were so far extended. And so that was Wednesday at the close. Thursday, a sell-off began, and we sold off Thursday, Friday, Monday. NASDAQ was down 10% as of the close of yesterday. And so a pretty significant correction over 3 days. Now, what's interesting, these lines can also act as lines of support. So this morning, when the market opened up, the NASDAQ was literally sitting on its 50 moving day average, sitting there on that line of support. So now what we watch is, and today we did have a reflexive rally finally. Not surprising, when the market sells off as much as it did, you typically do expect to see a bounce in the market. What's interesting though is that there was a sell-off at the end of trading today. So the NASDAQ was up about 3.5% all day, and then all of a sudden, right prior to the close, sold off and was down to about like 2.7%. So still a good day, just had some weakness at the end there. So here's what we need to watch though. Over the next couple days, if we have additional pullbacks, and we're now in correction territory for the NASDAQ. A correction is technically anything is defined being a 10% decrease in price or more. If we violate our 50 moving day average, then our next line of support comes all the way down to 200 moving day average. And so this is one of the things we'll be watching over the next few days, particularly, do we sit here and bounce off, or if we violate that line, there's a whole lot of other things that could happen from there. But so here's the NASDAQ. You can really just see this is a great picture about how typically over time we trend our 50 moving day average, and then as we get extended, you can see what happens. Another indicator that we track with the technicals I think is interesting, and it's just a reason it's worth mentioning, the RSI, Relative Strength Index. It just really tracks momentum in the market. So at the same time as we're seeing this pullback, we're seeing also RSI decrease fairly significantly here. So we're really watching this to see what happens. The fact that we're now below a reading of 50 is something that our investment committee is concerned about. So we're watching that. And what this is an indicator of is that there could potentially be a further correction coming for the index right now until we see this reverse back up, particularly about over 50. So that's something that we're looking at where we are a little concerned right now. We're watching that. So that's the NASDAQ. S&P 500, very similar here. So you can see here's our 50 moving day average, our 200 moving day average. And you can see here's our divergence all the way up the top. Again, we literally, when we opened today, we're just about sitting on our 50 moving day average because again, that's how these averages work. They do act as lines of support. If we were to violate this in the next short term, our next line of support would be here. And again, once certain things go into play though, then those are things that we would watch for potential additional pullbacks. Same thing, you can see RSI really fell here. Something then that we're watching just again to see if this does turn positive or not, because if it doesn't, that will be concerns for additional headwinds, at least short term in the market. Am I saying that we're going to have another 30% correction? No, I'm not saying that necessarily. I'm just saying that when we look at these numbers, these are the types of data that we have to be looking at collectively so that we can kind of make good decisions and interpret these numbers. But again, the technicals, they really do matter. They do, if you know what you're looking for, they can be quite foreshadowing. So the S&P 500 sold off over 6% in 3 trading days. Again, the NASDAQ was down 10. Both of them did have a nice little bounce today, which was good. So we'll see what happens tomorrow and the next day. It'll be interesting just to kind of see if we can hold that or if we see additional pullbacks along the way. So our equity positionings are actually holding up very well even in the midst of this pullback. So we're kind of outperforming right now what the indexes are doing, which is always good. And so we continue to have areas of holdings in consumer discretionary, innovative technology, consumer cyclicals, technology and industrials, building construction. So again, these are what we're looking at is we're making a decision very soon based upon the technicals. Can we add to these holdings or should we kind of stay where we are? And so those are decisions that we'll be making probably within even the next few trading days based upon what things like RSI looks like and how close we can trend to our moving averages and differences in price action and momentum and volume. Those are the things that we're looking at. But again, these are holding up very well. So really pleased to have the areas of exposure that we have right now. And just to kind of show you, so the red here is going to be the tactical equity positions that we hold in our portfolios right now. And so right before the sell-off happened, we were up at about 14.8%. Compared to the S&P 500, which was trading just like 11%. So again, our equity portion of the portfolio absolutely was outperforming the S&P, and we're still doing that even with this correction and the sell-off that we saw over these last 3 days. And again, this would have been as of closing yesterday, so this doesn't include today's bounce, but the equity positions in the portfolio up 4.69 versus the S&P up 2.97. So again, this is the power of having areas in the market with positive relative strength, positive momentum, and then avoiding the areas that will be laggards, because those are the areas that will draw down from your performance. And so our portfolio is still fairly conservative with 25% equity, and then the rest is in high yield and short-term high quality bonds. And so that gives us a lot of opportunity that as pullbacks like what we're going through happen, then we can deploy capital at the ready. And so we really just want to make sure these technicals confirm that we can do that, and we'll be able to. And so we, as I've said before, we don't mind being a little conservative. We were really just wanting to make sure that some of this fog could settle for us before we really made some other decisions, and we feel like we've gotten some confirmation. But that's where we are for this week. Again, it's been a really interesting week. I'm obviously very interested to see what happens over these next few days. So I thank you for joining us. If you have questions ever, you always can reach out to me, ashleyr@victoryfiduciary.com. I'm always happy to take questions, comments, feedback. And again, I hope you and your family are doing well, and we look forward to seeing you next time. Have a great day.